The topic is current economic issues, and of course we're talking to Dr. Paruchuri from the Department of Finance and Economics and Finance at Tennessee State University. And of course, Dr. Paruchuri, before we had our first commercial break, I think we promised that we'd give you an opportunity to talk about what we consider to be one of the major issues, and that is the regulation of some of these financial institutions. Let's start by, and then allow you to speak to the whole issue.
Okay, thank you.
Other issues.
Well, as I said earlier, it's the responsibility of the federalism system in this country to control, like the central banks of other countries. Our central bank, we call it, the federalism system. The chairman of the Fed, our federalism system, we call it, is Mr. Bernanke.
Okay.
Is a very knowledgeable person. The only thing which he has been doing is hesitating until things got worse. That's one of the hesitation which I have some problem with. But otherwise, he is a very well learned person, and he also started doing things. But the only thing which I have some problem with is the timing. Now, timing is not easy. No, it's a matter of picking up the right time to curb some of these things, and if there is a need for help, yeah, that's the time we should get come in there in time to make sure that the people have enough money available in the system.
That the help is there.
Yeah, help is there in their hands. But the thing is, unless they initiate and provide that help and to have enough money available and enough credit available to all of us, that is their job. And also control the banking system as a whole. And this is where the hesitation has led into demise of number of banks today. And you would see that a good number of banks have had problems in what we call the liquidity. That means enough cash to pay off their obligations. And that's one of the major problem, which I think is a serious problem. And I think even the Treasury has some obligation. Whenever these systems fail, it is the responsibility of the United States government, that includes the Treasury, should come forward to either, if there is a need for it, pump in some money. If there is too much money, they should be able to take away using their own resources. And as a matter of fact, government is a big in this country. Even though we like to claim that we are the richest nation in the world and the most capitalistic country in the world, it's not pure capitalism. We have what we call mixed capitalistic society, mixed with socialism. When the government gets involved in your affairs and my affairs, like they say, they bring in the cotton picking hands into your affair and my affair, and the banking affair. That is socialism. The government, for example, recently the government has taken over these two financial institutions, Sallie Mae and Freddie Mac. When they took it, that means the government is owning those companies. They have taken the liabilities of these companies. And that means government control is quite dominant. Now then, of course, we have this other one, the AIG problem. Now, AIG problem, they thought it over. They have done a fantastic job. Both the federalism system and the Treasury got together. So, Mr. Bernanke and Paulson, Secretary Paulson, and they have come up with a nice solution for this AIG problem. The AIG is spread in 130 different countries. They do business in these 130 different countries. And they also employ over 100,000 people in all these places. So when the government gets in there, and right now they took 80% of ownership, and 20% is still in the hands of the company. So here, the question is, how are they going to manage? Of course, when they got this 80% ownership, They also gave up yours and my money, the taxpayers' money, $80 billion as a loan, hoping that it would perk up. Otherwise, the problems which are going to be created in our society is unbelievable.
It's enormous.
Number of other insurance companies depend on that. The reputation of this, the credit rating goes down of not only any organization which is affiliated with AIG, and that includes enormous number of banks, enormous number of companies. So the problem is very serious. So both the Fed or the Federal Reserve System and the Treasury got together and said, okay, this is a better solution, which I think is one of the nicest things they have done. Hopefully it works in our favor.
In other words, we're just hoping that this works. There's no real guarantee that this will be successful.
No guarantee.
Now, assuming, Dr. Perachuri, that this is not as successful as they hope, then what? I mean, where do you go from here? Because all these other companies are failing too.
No, don't forget, when we are having problems here, the rest of the world is going to be hurt pretty bad. If you look at any stock exchange around the globe until yesterday, before this decision was made by the Treasury and the Fed, most of the markets around the globe have gone down in values, just like ours. Only after this, the confidence level goes up. It's a pure confidence level. So if you don't have the confidence, what do you do? What do I do?
You keep your money.
Yeah, keep your money tight and you don't want to part with it. And unless there is a lot of activity, lot of, without any fear, if they can get forward and say, only because of this guarantee which was given, there's a lot of confidence among the bankers, among the foreign central banks, who they are ready to help us.
But of course, what the confidence has to also exist in the people that are going to purchase these houses and et cetera.
The demand has to be created for these houses. Another solution, which is being...
And let us, Dr. Perachuri, stop for this second commercial break. Sorry about that.
Thank you.
We have to do that.
That's fine.
And of course, we'll be back with our audience following this very, very short commercial break.
Thank you.
Dr. Perachuri,